Hello, this is Gary Schnitke. I'm a professor in agricultural economics at the University of Illinois, and this is a presentation for the Virtual Crop Management Seminar 22 version, and I will be talking about managing 2022 input uncertainties. My outline for today is to talk about the 2022 outlook, and we will be going over grain outlook or corn and soybean outlook more specifically. And I will be going through a number of costs. Fertilizer is where we will spend most of our time, and then we'll move on to other costs. And the short story of that is our cost of production on grain farms is going to go up considerably in 2022. And that is just reality, and that's going to raise our break-even levels, and we will see where we end the year at. I'll then make income projections for this year. And right now, if we're looking at prices for fall delivery, and this is the end of January, if we're looking, as we're recording this video, as we're looking at prices at this point in time, it could be a profitable year. So we'll look at that, then talk about some suggestions for the coming year, and then we will talk a little bit about beyond 2022. So that's the outline. We're going to start here with fertilizer cost, and the fertilizer cost we are looking at is anhydrous ammonia on this slide, for example, and the last reading we have for that is $1,486 per ton. That was for the first 2 weeks of January 2022 and $1,486. Obviously, that's a very high price, but there is a bit of good news there. This is the first 2-week period, and this is reported by the Illinois Production Cost Report. This is the first 2-week period in the last half of 2012 where the price did not go up. So we are looking at least stability from the standpoint of where it has been recently. Nitrogen fertilizer prices have increased tremendously from 2 years ago, or in October 2020, we were looking at anhydrous ammonia prices in Illinois at $450 per ton, and now we're over at $1,400 per ton. Since early fall, late summer, early fall, we were looking at ammonia prices in the $700 to $800 a ton, and again, now we're at $1,400 per ton. Other fertilizer prices have gone up as well. DAP is now currently up at $8.53, and that increased as well. And potash is at $8.06, and that increased obviously as well. So we're looking at higher prices now here in the first part of January of this year. I am going to take a look then at what these new or higher fertilizer prices mean for fertilizer cost per acre. And this is a central Illinois situation, and we're taking requirements for DAP and potash to meet the replacement requirements of 220 bushel land. And we are going to use 2 anhydrous ammonia rates, one of 234, and that was for last year, 207, and that's for this year. And we'll talk about that as we're going through. In October 22, 2020, we had ammonia prices of $432, DAP prices of $428, and potash price of $327. That gave us a total fertilizer cost of $94 using those prices. Soybeans came in at $46, and both of those are cost per acre, making replacement values for DAP and potash and anhydrous at MRTN levels. If we're looking at this year, we're looking at $118 per acre of anhydrous ammonia and a total fertilizer cost of $232 per ton for corn, and for soybeans $106. So if we're looking at those corn costs, we went up $138 per acre. Obviously a large increase, more than doubling of fertilizer cost. Again, that's at $1,400 per ton. Soybeans went up as well, $60 per ton, and again, that's because we're looking at DAP and potash prices. If we're looking at the corn versus soybean decision, we're most going to focus a lot on anhydrous ammonia, or the nitrogen part of our budget here, because if you look at DAP and potash, the corn and soybeans even out. It's the nitrogen part of the budget that causes differences between corn and soybeans. And let's just take that anhydrous ammonia price. And this is the same anhydrous ammonia price that we saw in the previous graph. And again, we have those high prices here in recent time and that rapid increase in 2021. I'm going to show you two other sets of prices. First is natural gas, and this is natural gas dollars per million BTUs. This is a Henry Hub price. And you can see that there is a relationship, positive correlation between anhydrous ammonia prices and natural gas, and that's as you would expect because natural gas is a major cost ingredient in the production of anhydrous ammonia. And natural gas prices have went up here the last part of 2020, so have anhydrous ammonia prices. Now we're also going to put corn prices in there, and corn prices, as you can see here, are on here as well. Corn prices have went up as well. And one of the things that you will note here, if you're looking at this graph, is that corn and anhydrous ammonia follow each other closely as well. We built a little model where we're looking at the price of anhydrous ammonia, and we related to that to lag anhydrous ammonia price, corn price, and natural gas price. So we fit a statistical model to that. And what we found when we do that is that this model explains ammonia prices well up to November 2021. So as we looked at prices moving into the fall, it was following what we would expect up to November 2021. Another key point of that is our corn price is more important in that and plays a larger role in ammonia price than does natural gas. You can make various arguments for why that is the case. As we see higher corn prices, we likely see more demand for nitrogen fertilizers. You can also build in greed there. It doesn't really matter why it happens, it happens. But if we look at November 2021, our actual price is $400 above what we would predict. Just to give you a feel, this is our actual anhydrous ammonia price and what we would predict with our model. And you can see up till the end there, that November 2021, we're following each other closely, but that November 2021 price is $400 above what we would predict. And just to blow that up a little bit, $435 higher, and that's the last period, and you can see that it just skyrockets up. You can speculate about why that is the case, or why those prices have gone up so much, or why that market that actual price has varied from our predicted price, but it has. And one of the reasons often given for that is the Hurricane Ida hitting New Orleans and the Louisiana area and that lower Mississippi area and shutting down ammonia plants and causing shortages there. What we just to state that again, we see $400 per ton price built into the markets, at least compared to our market results. And we are often asked what will happen to spring. And my expectations is that we won't see large price declines by spring. We could see some moderation in that $400 price, but not a large decrease in price. And it's a $400 premium. If you're looking at where corn prices are in the mid fives and where natural gas prices are, we would expect to see a anhydrous ammonia price in the $1,000 to $1,100 per ton range. So even if we got back to our model results, we're looking at some very high anhydrous ammonia prices. I personally don't expect that to decline by the time we need to make our nitrogen applications for 2022. There are also a couple other considerations. There are very high production costs, i.e., natural gas is much higher in other countries, in particular Europe. Europe and the Russia and the pipeline situation and the Ukraine situation all plays into Europe having very high natural gas prices. And if you're a fertilizer company, providing that market with fertilizers is probably more lucrative than providing the U.S. And there are countervailing duties in place. All of that is to say that we're likely to see natural gas and anhydrous ammonia prices high throughout this production season. So, given these high prices, though, I believe that we're going to see fertilizer, corn, and soybean prices to be very much related to one another until planting occurs. And by that, I mean, as we continue to see these high fertilizer prices, we'll see the margin between corn and soybeans being wide enough to make corn a profitable or competitive alternative with soybeans and other crops. And the reason why that needs to be the case is because we need those corn acres, and to get those corn acres, we need to see competitive prices. That relationship could go away as soon as we've planted, because once we planted, the market no longer has to get those acres aboard, and then weather and other conditions are going to determine those price relationships. So, if we see farmers planting more soybeans, and I could see farmers making that decision, we're going to plant more soybeans, I would suggest that you price that additional soybeans. Because if we're making a decision from a marketing standpoint, then let's lock in those profits. If we're going to buy some expensive nitrogen, let's price some of that corn. Particularly at the levels that we're looking at right now, fall bids, $5.50, we can lock in some profitable levels. Overall, I would say that we should be considering locking in or pricing more of our 2022 crop now than we usually do. And that's not a projection that we're going to have lower prices come fall. If we have any sort of yield shortfall in the United States, we could see much higher corn and soybean prices than we do now. But we could also see lower. And remember that we have much higher production costs, so locking in some of those profits that we do see currently might not be a bad thing. So let's talk a little bit here, though, going forward about strategies with nitrogen. And if we got all our fall applied on, we're done, right? So we're not talking about strategies for our fall applied. But if we still have nitrogen to put on, there's a couple of things that we consider. None of them are going to be particularly heartwarming, but we do have some strategies that will help us maintain profitability. Strategy one is to reduce rates. And as we're looking at anhydrous ammonia go up in price, our MRTN, which is what these numbers are generated from, this is for northern, central, and southern Illinois. As we increase that anhydrous ammonia price, we reduce the N rate. So, if we are in this situation where we are buying high nitrogen at high prices, our models would say to reduce the rate. You could see slight yield drags because of that, but again, you're paying for very high nitrogen. I would also note that many farmers apply above MRTNs, much higher than MRTNs. This is the year you might want to experiment. If you believe that's warranted, at least put some test strips in and apply it to MRTN and see what happens, because this high price year is one where that strategy gets very costly. Strategy two is to split applications. And if we still have nitrogen to put on in the spring, apply 75% of the MRTN before plant and wait and see what it looks like after planting. So let's do it after planting, and this is a classic risk management strategy. See if we see what rates do, what prices look like, and get closer to that time point where we know more about what our fall prices are look like, given that we haven't locked those in yet. The final strategy is to apply most of our our nitrogen as anhydrous ammonia. Almost always, anhydrous ammonia is the least expensive source of nitrogen, and in a high price year, if you're looking at cutting those costs, using anhydrous as the source will be the will make a lot more difference in a high price year than in a low price year. The other thing that we'll be facing is a pesticide issue, and there are going to be supply issues with glyphosate and glyphosate, and those are going to continue. Those are related to COVID items that caused disruptions in the supply chain. And the COVID dramatically changed our supply system, and we are still working our way back to a normal new equilibrium given what we did to the supply chain with the COVID. We also had China issues, and their production of glyphosate and glyphosate are the basic ingredients. Container issues, Hurricane Ida, and the closing of the Bear plant. You can expect large increases in pesticide prices. I would speculate that most likely we're going to have supply, because it may be reduced, but most of us will be able to get supply, because at those prices there's a large incentive to provide that input. But we will need to reevaluate our pesticide programs in light of our large cost increases. Now, I know this is a joke, but one of the things you could do is think about row cultivating. Here we came up with a row cultivator, which is hard to find. And I know it's a joke because even if you wanted to do it, you couldn't find the equipment now or get it ordered and get it here. So, but we do, again, need to evaluate those pesticide programs, and that's not going to go away as we have limited or have no new chemistry coming on board, and our herbicide resistance continue to grow, and our regulatory concerns may even limit the chemicals that we do have. All right, let's go through a budget. This is a Central Illinois budget. We're expecting 220 bushel corn, 68 bushel soybeans. Again, those would be trend yields. I'm using current fall delivery prices here, $5.25 for corn, $12.50 for soybeans. I built in here fertilizer prices based on a $1,400 ammonia price. Obviously, that's a lot of farmers got quite a bit of nitrogen on in the fall. $700 and $800 prices per ton prices were achievable if we did it early in the fall. People that locked it in then probably were wondering if they had made a mistake. But in any case, we have some farmers that will have much lower than those $1,400 per ton price, and below $230 per acre for anhydrous ammonia. We built in increases in pesticide and soybean for both pesticide costs for both corn and soybeans. Our direct costs are very high. And even just a point here, when we look at corn versus soybeans, built budgets here for with $1,400 per ton of anhydrous ammonia, we're still seeing a positive return to corn. And again, right now, to get those corn acres, we need to see those higher prices. Putting those returns into some sort of context, their 2022 bars there show what those budgets in the previous slide look like. You can see those in a historical context going back to 2000, where we have these actual results from Illinois grain farms for Central Illinois on high productivity land. And you can see the corn in blue soybeans in red, and up to 2021, soybeans were more profitable than corn through 2014 through 2020. We're looking at 2021 corn being more profitable than soybeans, and likely at current prices the same thing for 2022. One note you'll make here is that the bars for 22 are less than 2021. I would note that those bars are at 525 and 1250, very high prices from a historical standpoint. So our income or our returns are going to be coming down from those, and our costs, including cash rents, are increasing. That will mean that we are looking at much higher break-even levels for corn and soybeans. Here we're showing non-land cost from 2000 up to the present. We're projecting $755 of non-land cost. That's over $100 higher than 2021, and over $150 higher than 2020. We have cash rent for 2022 penciled in there at $309. That's an average, and you can find rents that are over $400. So we're looking at quite a range of rents, and at that average $309, we're looking at $1,064 of cost this year to put out a crop, and that would be on cash rent farmland. Given those high costs, here's our break-even, $4.73. So $4.73 are break-even given our typical yields. Very high compared to total cost in all years except going back to 2012 when we had much higher cost. But that was due to low yields caused by the drought. If we take into consideration crop insurance payments and ARC and PLC payments, you can see that break-even came down a lot. And considering those, 473 is the highest we've seen since 2000, and it will be the highest on record. You can say the same thing for soybeans. 476 is where we're coming out at non-land costs. 309, $785 to put a crop of soybeans in, and will result in a break-even price of $11.06. So much higher than it has been in the past, and those are where we are looking at right now. Given the 525 and 1250 that we're looking at, we still have profitability out there, but we have much higher break-even prices. Looking at incomes, we are projecting 2021 incomes yet, and we're going to show 2022 incomes. These are average incomes for farms enrolled in FBFM. We're projecting $325,000 per farm, and the average farm size in this FBFM is 1,500 acres. We have many farms that are much larger than that, a couple farms over 10,000, and obviously many farms lower than that. $325,000 for 2021, and we're coming up with a projection of income for 2022 of $130,000 per farm using $5 and $12. So you get a feel there. Those are excellent prices, but we're coming down with our income projections because of those lower, because of those much higher non-land costs. If we don't get that $5 corn price, $12 soybean price, and go to $4.80 and $10.50, which is what many people are projecting, something in that range, we would have $57,000 of income. And if we go back to the 2014 to 2020 average prices, $4.10, we would be well below zero, minus $65,000. So that's what we're looking at. So we need the higher prices, at least from a historical perspective, to have positive income. So what are our suggestions? One of the things that we would suggest is hedging more grain. And And we are looking at profitability now. So let's hedge more grain. And again, not saying that those prices are going to come down, but even if they do come down a bit, we are pretty quickly at break-even levels. We would continue to say buy up on crop insurance. Most farmers are buying RP at 75, 80, and 85% levels. Think about staying at those levels and maybe buying up from there on the ECO, SCO, other private product insurances. Again, get a higher guarantee in there. You have to pencil those out quickly, but staying at least high on those RP products will provide a pretty good floor for our coverage. I would suggest not changing crop rotations much. I mean, we're looking at, we've heard first that switching to more soybeans, which may be good for the long run, but right now corn looks more profitable. And not switching to more corn right now. If you're going to do either one, switch from corn or to more corn or more soybeans, I would suggest pricing those bushels. I would also suggest lowering nitrogen rates, particularly because we've seen higher prices, and let's rely more on post applications. And then see what 2023 brings. Here's my crystal ball looking into 2023 as far as cost. I think we're going to continue to see labor shortages continuing into the future. Everyone is looking for employees. Farmers can't find harvest employees and other items. Every employer that I know of has an employee issue. So anything that's related to labor is going to increase in cost over time, and that will likely hit our equipment markets. We will likely continue to see seed cost increase 8 to 10% per year. Pesticide will continue to increase, but we'll likely see those the increases moderate from 2022 levels. I don't think they're going to decline. The only way they're going to decline is if we see commodity prices go back to 4 and 10. Equipment prices will continue to increase, and the only cost where you're looking at some possibilities of decline is fertilizer. But fertilizer prices are going to be very closely related to what commodity prices look like. So with that, just to summarize here, 2022, we're looking at much higher cost, but given where our prices are at, we could still see a profitable 2022. Moving forward, these costs are likely to remain at higher levels, and we will see what that will mean in 2023 and how long commodity prices stay at the levels they are. Appreciate your time in listening to this video.